In this video, we're going to discuss the rules surrounding dependents. It is very important to understand when a taxpayer can claim someone as a dependent, because it does affect some deductions that a taxpayer may be entitled to and also some credits. When we're trying to determine whether someone qualifies as a dependent, there really are two separate types of tests. The first test is to determine whether someone is a qualifying child, and we will go over those rules shortly. And then the second test is to determine whether someone is a qualifying relative. And in most circumstances, we apply the qualifying child test first, and then if the taxpayer fails under that test, then we would apply the qualifying relative. If you have worked with taxes in the past, then you know that in the past, individuals were entitled to a personal exemption and also a dependency exemption for each one of their children. And in the past, that amount, or I should say in 2017, that amount was $4,050. For 2018, as we mentioned in class, the amount has been designated to be $4,150. However, taxpayers are not entitled anymore to receive a personal exemption deduction, because that has been faded out by the new tax law for the years 2018 through the year 2025. So why does the number still exist? The number exists because we need to use it to measure when we are applying our dependency tests. The qualifying child test is made up of multiple parts. As you can see here listed, very first is the relationship test. And the relationship test, all it really states is you must fall into one or two categories. And one is it a child, a daughter, an adopted child, a stepchild, or even a foster child, or a descendant of any one of those, which would be a grandchild. Or it would fall under the category of a brother, a sister, a half-brother, a half-sister, a stepbrother, or a descendant in any of them, which would be a niece or a nephew. In terms of residency, the child the taxpayer is trying to claim as a dependent must have lived with the taxpayer for at least half of the year. As we move on, we have support, and we talked about support in the classroom. Support just means that the taxpayer must have provided greater than 50% of the support for that particular child. Now, we will see one more thing noted here, a qualifying child of more than one person, where there might be a situation where more than one person is providing support for that child, but no one person is providing greater than 50% support of that child. We may have to apply what is called tiebreaker rules. And if we run across that scenario, we will go to our publication 4012 and look at those rules. Those instances should be very rare in the tax center, but at least we want to know that those are there. We would go on to a decision tree and make those determinations at that point, should we encounter that issue. The qualifying relative test has 4 different components that are directly related to it. Now remember, I noted that we must start with the qualifying child test, and then if the dependent fails that particular test, we will then apply the qualifying relative test. Now specifically to this, we're going to look at whether the potential dependent is a qualifying child of someone else. If the dependent may be a qualifying child of someone else, then our taxpayer cannot claim this person as a dependent. The qualifying relative must also be a member of the household or must meet a certain relationship, which is very important. And when we're talking about relationship and whether they're a member of the household, the major distinction here is that if the person does not meet the relationship test, this person must live in the household for the entire year. So the entire 365 days of the year, they must live in the household. If the person meets a relationship test, then they must only live in the household at least a half a year. So in this particular case, what are the relationships? Again, it's the same relationships as we saw under qualifying child. It is either a child, a stepchild, a foster child, or a descendant of one of them. It can also be the taxpayer's brother or sister, half brother, half sister, or descendant of one of them. But one thing that we note here that is different from what we saw before is that it can be an in-law type of relationship. So a son-in-law, a daughter-in-law, a father-in-law, and a mother-in-law. And what I want to make note is that there is something very interesting in this particular arena when we're talking about in-laws, is that if you were an in-law, and let's say you had a mother-in-law and a father-in-law, and you and your spouse were to become divorced, just because you are divorced, the relationship between you and your mother-in-law and your father-in-law is not severed under the eyes of the law. So you may still continue to provide them support, and you may still continue to have them qualify as qualifying relatives. The next test we're going to see here is the gross income test. And the gross income test is measured against the personal exemption amount, which is why I mentioned even though personal exemptions are no longer allowed, we still need to use that number to make some determinations. In this particular case, the qualifying relative cannot make more than $4,150. My apologies, $4,150 in that particular year, which is the exemption amount for 2018. In terms of the support is the same exact test as we saw under the qualifying child. The particular dependent may not be providing greater than 50% of his own support. The next issue we need to contend with here is what if we have a dependent who is a child of a divorced couple or is legally separated parents. And this has happened quite a bit, as I mentioned in class in my own practice, where one parent who was really not entitled to claim the child as a dependent just went ahead, filed their tax return first, claimed the dependent, and then several issues arise when the taxpayer who really was entitled to claim the child as a dependent files their return later, and we have to deal with those types of issues. In this particular case, you may have a couple who is divorced. The custodial parent is normally the parent who gets the dependency exemption, even if they are not providing directly 50%, greater than 50% of the support. The courts follow custody first, and then the child support that is being used to take care of that child is actually considered part of that support and still will allow for the custodial parent to be the one to claim the child. Now, if the custodial parent wants to release that particular dependency claim, they may do so by using Form 8332, and they would complete this form, and on this form you could state, is this a one-time thing? I'm going to release it for 1 year. Maybe you're going to do it every other year, or maybe you're going to do it permanently. This form would then be given to the other parent, the non-custodial parent, and they would use it also in their tax return to show proof that they are entitled to claim the child in any given year. Now, this does happen in cases of divorce where it may actually be in the divorce decree stated that they will take alternate years of claiming the child. Or one as recently that I saw mentioned that whoever had the higher income in that year would be the one that would be able to claim the child. So in summary, if the taxpayer is trying to claim someone as a dependent, the dependent cannot be being claimed by someone else on a different tax return. So we want to make sure that we watch for the potential that a dependent the taxpayer might be trying to claim is actually being claimed from someone else. Like in an example we had earlier about the uncle who was trying to claim his nephew. We should be asking, is there someone else who can claim the child? And most likely that would have been the parents under that scenario. A person who files a joint return can't be claimed as a dependent unless the joint return is only filed to claim a refund of withheld income tax or estimated tax paid. Now, this is a new element we haven't spoken about yet, but it just means that, let's say, you're a young adult and you got married, but yet your parents are still supporting you. If you and your husband decide to file a joint return, it is okay that you file a joint return. Your parents can still claim you as a dependent, but only if the only reason why you filed the joint return was to claim a refund of taxes withheld. If in a particular case you actually owe the taxes, then the parent would not be able to claim you under that scenario. A person cannot be claimed as dependent unless that person is a U.S. citizen, a U.S. resident alien, and most of us know that to be called as someone who has a green card, or is a U.S. national, or a resident of Canada or Mexico for at least some part of the year. There are some exceptions for adopted children, and the reason why is because, again, we do see a lot of social policy in tax law, and that is we want to encourage people to adopt children. And the sentiment is that we don't want them to have to wait to a certain point so that they can start claiming some deductions. And is that logical? Will people really wait? I don't know. But in response to the law, we like to think about these things, and we like to say, you know what, let's do some social good here with our law, and let's make an exception in those cases where someone is adopting a child. A dependent must be either a qualifying child or a qualifying relative. So the dependent must meet one of these two tests in order to be claimed as a dependent.